And welcome friends, so lesson about ranges, how to trade them, what is range. It would be really useful. I will show you maybe 3 or 4 trading patterns which you can use and trade on all markets. Most examples will be on gold. That's why before we start, smash like button because it is for YouTube algorithms. More people will see it. Also, let's make a deal. If you will enjoy this lesson, after that you would recommend it to your friend. That's why. Let's go. What is range and how to trade it? Range, it is when price inside, in the middle of some move. Example for you of this chart, it's example for you of a range. But there would be a lot of different type of ranges. I will show you 2 of them and you will know how to trade it. Take a look on this example. Range, it is when price bounce off from some borders and create area, which inside area we call it a range. And as you can see, price moves inside from one border to another, and it is a range. There would be a different type of ranges because sometimes this move could be for one day, sometimes it could be a few months, sometimes there could be very small, very tiny, like distance could be 100 pips, sometimes range would be 500, 600 pips, and you will understand the logic of all of these ranges because all of them completely different. Let's start from first one. It is a long range, along a big range. Example for you of this example on gold. Let's open it on a chart. As you can see, how we build this type of a range. As you can see, my friend, what's going on here? As you can see here, how it works. Price accumulate big energy and volume inside, because inside in this range big guys can accumulate big position. And remember, in most cases when you face such range, after that, when price start a trend, there could be huge move. How can you trade it? First, when you see that price inside of this range, best idea would be when you trade it from a border of this range. Like you see, you have this candle, or you build by this, and you see that price approach to this time. First time you open sell. Like price come to this level, you open buy. Only when price break it out and daily, as you can see, daily candle close above below, only that you can call a range breakout. And when that happens, your strategy will be different. Once more, how you can trade range? First, you have borders of this range, and best to trade false breakout. About false breakout, below this video there will be a lesson about what is false breakout and that strategy. I recommend you to watch that lesson because for you it will be clear. Yes, there we speak more about levels, but still range and border, it is a level. That's why you can use it. Once more, false breakout of this border, it is really good place for entries. And another one, it is when price create a breakout, because take a look. And also lesson about breakout strategy will be below this video, and you will understand how to trade breakout strategy. Take a look on this beautiful level inside which was, and take a look how price bounce off from this level. And also you can face here head and shoulders, and you can see this head and shoulder patterns. Sometimes when you see such patterns, you can use it. Also, you should always pay attention in what direction range, because as you can see, before we had uptrend, and as you can see, in most cases price will continue. And as you can see, after breakout of this range, price started up more. Because how it works, imagine inside a lot of people who open buy and sell, and those who accumulated big sell position, what will happen with them when price break up? They are in losses, and when sellers close their positions here, they buy back. Because when you open sell, to close it, you need to buy back. About how market works, there would be a lesson. Maybe we already recorded it, or it will be a next one. There would be below this. How market works and how market works from this perspective, buyers and sellers, why price moves. There would be below link, and below would be a lesson. We recorded it. If we didn't record it yet, till this moment, when we will do it, we will add it below this video. That's why scroll. It is a first example for you how you can trade these ranges. Sometimes that ranges could be completely different, because sometimes you would see that those ranges very small, very tiny, like inside in one candle. I love such type of ranges. Why? Because when you face such range, it is sometimes, believe me, it is far more easier to trade. Because as you can see, when you see the price inside in this range, but before we had this big, huge accumulation, Imagine some guys in JP Morgan accumulated big position for a buy with this average price, and they will protect it. That's how trend starts. They will protect that position. And here, as you can see, we have powerful bullish momentum, and what we wait? We wait for breakout of this range. And in most cases, how you will trade it? You will wait, you will just set pending order above that level, above range border. And as you can see, after when price broke this level, take a look, small pullback, and after price just broke and never came back. Imagine how it's powerful, because inside, imagine so many people open sell and buy at the same time. And those who open sell inside of this, they would start closing because their stop losses above it. And they stop losses of sales, it's a buy. That's how big players, big guys accumulate energy and volume in a market. One small lesson will be a lesson about how big guys accumulate energy will be below. That's a second example for you, a range. When you face that, you see very beautiful range border, and you see that price inside moves for many weeks or days or few days or hours, and you see that our momentum was we started from down, up move, with huge possibility price will continue its trend. The same with downward. If price started a downtrend and you face something like this, very big possibility price will continue it. How you trade? When you see that price approach to range border, you set pending order below channel. You set sell stop pending order, for example, like this one. You set such sell stop pending order. Stop loss could be 20% of ATR. What is ATR? ATR, it is average volatility of instrument, because some people make big mistake when they set stop losses always the same, like 20 pips, 50 pips. It's not proper, because volatility of every instrument is different. Take a look, example for you, ATR indicator on different instruments, and it shows average daily volatility. Take a look, Euro USD, current volatility 70 pips per day. In British pound, 110 pips. Gold average volatility 229 pips. As you can see, volatility of every instrument is different, and you need use a stop loss which based on ATR, like 20%. What is ATR? There would be a lesson below this video, you should watch it. And after that, you can see a distance like this one, space. Here is 200 pips, and you can set also take profit 200 pips. It would be easy for you to use it. And also, my friends, third type of range, which I really love, which I love to trade when you face squeezing. When you see something like this, why I love this one? Because this one shows to you that we have powerful buyer. Here, take a look, because someone buy price and push up, just push it up. And take a look here. What's going on here? As you can see, range before a level which we built by this paranormal candle. And imagine that a lot of how many people buy and sell at the same time here, because as you can see, price was in that range for 1, 2, 3, 4, 5, 6, even nearly 7 days. Price before range border nearly 7 days, and as you can see, breakout of this started up price. One small lesson about breakout strategy will be below this lesson, how to set stop losses and take profits. That's maybe my favorite one. It also looks like triangle pattern, but for me it is the best example how to trade range, because I love this type. Why? Because in most cases, big guys show to you what they are doing. And example for you, how I traded that pattern, example even was on Bitcoin a few days ago. As you can see, we trade breakout, price were in this range, but every low higher and higher. And we had a powerful uptrend. As you can see, powerful uptrend, and price doesn't do a pullback from this level. That means someone powerful want to buy it, and take a look how beautiful buy was. We open buy, as you can see, level, range border, and how did we open a buy? We set pending order when price was here. Price broke it, hit my pending order, and here I moved, I close it I moved stop loss when price was here, moved stop loss here, because I thought price can break another level, but it didn't happen, and I took out my money, as you can see here. That's example for you, and to be honest, I love this the best. For me, this one's the best. Once more, my friends, let's summarize. in most cases, you will face different ranges. What is a range? Once more, it is when price inside in some area. Sometimes price can be for few days, sometimes price can be for bigger period of time. When you see a range for a few months, remember, after such ranges, in most cases, there would be powerful trend. Why? Because inside in this range, big guys, big players can accumulate big position. About how market is built, how big guys accumulate position, lesson will be below this video in description. Another example for you, let's do one more example when big guys also created powerful range, and after that, price started long and big movement. Take a look on this range. Sometimes range will be something like this. Distance from this level to this one is 600 pips. 600 pips distance from these levels, and price were from January, February, March, April, and only on May price broke it down. Price finally broke down on May this range and started powerful down drop. Why? Because why it works? Because imagine some big guys in JP Morgan, Goldman Sachs, they decided that they need move price down and they want to accumulate 1 million lots. But average daily volume on gold like 1 million, they need 10. That means they will create ranges, and every day they will absorb part of volume, part of that energy, and break out of this, start powerful trend. Why? Because imagine these guys, big guys, hold position for a sell here. They have a lot of money, bunch of money, and what they do? They after that they just push it down. When price do a pullback, they just add additional position, and after that again push it down. And as you can see, in most cases, price always finish its trend with such paranormal movement. As you can see, it's here. You will face often that price finish its trend with paranormal movement. About how to catch market reversal, of course, there would be a video lesson below this, and you will understand the logic of that. That's why, my friends, once more, trade ranges carefully, use the different schemes, and also I would like show to you mirror level after. And another way how you can trade Z levels, it is a mirror level after breakout. What does it mean? Sometimes when price break it create from range border, it create a mirror level, and you can open a position from it. Example for you here, and also I'll show you another example. Take a look. We have this level by this candle, which stop all this move. Take a look. When price broke it 2 times, price came back to this level and bounce off 2 times. It calls a mirror level. What is a mirror level? When we have resistance, and that resistance become a support, as you can see, it's here. Also, when price come back to beautiful range, you can open entry as from resistance. Some example, beautiful example I would like to share. Take a look, even this. When price were inside in this candle, as you can see, inside. Really, price were inside in this candle. And what happened? As you can see, price broke this range, and after, maybe you didn't open a trade here when range were broken, but you could open entry when price came back and made false breakout here. As you can see, from that point, price rose up. If you open proper entry with proper stop loss, price rose up for risk reward 1 to 8, or even if you would hold it for this period, rose up to 1.15. That's why you should trade it properly. Okay, friends, let's summarize. When you have big global range, you can trade for a start from range border after false breakouts. When price breaks that powerful and big range, you can trade it after pullbacks. Price do pullback, you open sell. Price dropping down, do a pullback, you open sell. When you have a small range, like very small range, small tiny range, you just wait when price will come to one of these borders and would trade breakout. Especially when you face, when you see that every low approaching to level, possibility of breakout increase. Or also, in most cases, price will continue range into that direction which it started. In most cases, that would be something like this. That's all. Once more, if this lesson useful for you right now, push like button and also write please about yourself, where are you from and why are you watching this lesson, what was the most useful for you. Below this video you'll find a lot of useful links. Here you will find a link on our course for beginners. That would be free lessons where you can learn how to start your trading career properly, how to stop wasting money, how to build your strategies. That would be a lot of useful stuff. Also open that page because you will be able to see all reviews really awesome. That's why, my friends, see you. And remember, here below this video, links on our course where you can learn how to trade it and become better trader. See you. Bye.